Welcome back to the Traders Network. I'm Michael Yorby, your host. Thanks for joining us. Broadcasting to you live from the Dallas KFXR 1190 AM iHeartMedia studios and worldwide through yorbamedia.com. All right, first guest today is Mr. Ed Baxter, Senior Managing Partner and founder of Bison Creek Capital. He has got a list of licenses, 6, 7, 63, 65, 24. He's been in the industry forever, and he's a local guy. He's also a graduate at SMU. Matter of fact, Ed, welcome to the show. I'm going to let you walk over some of the things that you've done in your history, but you're really here because we're going to talk about crowdfunding with you, right?
That's correct today, Michael.
Okay, great. Give the audience a flavor for your experience in capital formation, working with public-private companies in the crowdfunding sector, but also set us up for what you bring to the table, what you've already done in this industry sector.
Well, from a historical standpoint, we'll talk about my history in the industry, which started at a large firm as a trader, and at that point recognizing the disproportionate advantages we had as professionals versus the public.
Okay. Now, Ed, you've worked with private companies, public companies. You brought a lot of money to the table for these companies. You helped them move forward and succeed. As a matter of fact, you're also an author, right? What was the book you wrote?
My first book was a book called Swindle Proof, which was my manifesto for helping people avoid the common scams associated in some of the things that happen in the investment community.
Okay. All right. Talk to me about crowdfunding.
One thing that stands out, as I mentioned earlier, about as a trader and as a trader for an institution, you recognize that there's a disproportionate advantage that institutions have on the investment side, whether it's public or private. The first thing you notice is that advantage can be really significant. What crowdfunding does more than anything else is it democratizes that process going forward. It assists normal companies that are looking to raise capital and gives them a conduit by which they can do so without going through the normal channels.
All right. Now, this crowdfunding has had a lot of growing pains. First, everybody thought it was going to be the end-all, be-all of raising money in the wild, wild west. And then, the Securities and Exchange Commission couldn't get off the dime on making certain rulings that allowed it to be an equity partner when you invest in it. And then all of these portals started to show up. And we're at the precipice right now of making a major breakthrough on the crowdfunding. But you say democratization of capital formation, but give everybody a more down-to-earth feeling of where we are with the crowdfunding and where you think it's going to go. And then I want to get into some of the other minutiae that we can talk about on this.
Well, what crowdfunding does more than anything else is it allows literally anyone who has a reasonable idea to try to fund that idea through public markets. In the past, people weren't allowed to directly address the public when it came to raising investment capital for a particular project they had. What crowdfunding does is it brings everybody to the table and gives opportunities for those who typically wouldn't see a particular transaction. It gives them a chance to be involved in that transaction.
So what I'm getting right now, crowdfunding, yes, everybody can participate. You can get somebody that wants to. Do you have to be 18 to participate in a crowdfunding project, by the way?
Pretty much.
Okay. But for up till now, you can only get a T-shirt, a donation, or some kind of trade, like, free pedicure or something of that nature, or maybe some kind of swag for a movie if you're doing that, right?
That would be correct, depending on which type of platform you're involved with.
Okay. Now people are coming to the market with all of these projects that they want to do, but they're different. Now they're becoming what used to be the micro cap, the nano cap, the 0.0004% of a penny. Those concepts are now coming into crowdfunding areas, and we're getting better ideas in there, and we're just about ready to start getting equity for our money, actually a piece of the action, right?
That's correct. For public companies, the Jobs Act and the crowdfunding allows them to solicit investors on the accredited side and the unaccredited side, but not necessarily take unaccredited investors, but it gives them a chance to actually advertise their project to bring more action and more attention to it.
Okay, let's get into the fact and fiction of this thing, because the fiction from I get is everybody can go to a website now and raise all kinds of money from anybody they want to, and they just sail off into the sunset with millions of dollars, and it costs them $300 to pay the guy on the platform. That's not really the case, is it?
No, that's not the case at all. The filings for a 505, 506, 506C, or 506B offering are still essentially the same. The difference between the two different offerings is whether or not you have to actually validate the accreditation of the investor themselves. The reality of crowdfunding as we know it for public companies is really more access. And in the past, you were unable to see any of these transactions in any way, form, or fashion, and only institutions and large investors actually got a chance to see them.
All right. Now everybody gets a chance to take a look at them, but as far as people being able to participate in the equity, isn't the biggest chunk of investment in the equity of these new companies really going to be taken up by accredited investors?
Most of that will be taken by accredited investors. The biggest thing they have to look out for is they are considered sophisticated investors and they can absorb the risk associated with new companies. So depending on the type of transaction you're doing, you can invest as little as $5,000 in a crowdfunding campaign. But most equity deals where you're looking at a public company, typically you're looking at a scenario where you're looking at an accredited investor with a significant net worth.
Okay, so the same thing. You just got more transparency, but most of the guys that are raising money, they're really looking for accredited investors to participate with them, right?
That would be correct. The crowdfunding that would be akin to what we're speaking of here would be more closely related to corporate finance in lieu of just pure project funding or having a particular type of charity you were interested in actually supporting. This is the way that companies raise capital as microcap companies via the public markets.
All right. Now, the thing that got this whole crowdfunding push off the dime was the Jobs Act. Tell everybody what the Jobs Act is and what it allows.
Well, the Jobs Act was basically designed to regulate something that was unregulated. Crowdfunding actually existed prior to the Jobs Act. What we needed was a format by which the government could regulate it. Typically, technology takes a front seat to regulation, and ultimately, at some point, the government has to step in and create what they consider to be somewhat of a level playing field for that, how that technology is used, and that's essentially what the Jobs Act did. It gave some structure to the crowdfunding possibilities that we see now.
Yeah, one of the guys that wrote that, Senator Patrick McHenry, was on the show right after they got this thing passed years ago with us. The other thing that I noticed in the Jobs Act, it allows people who are raising money to advertise.
Correct.
I mean, not just crowdfunding. Hedge funds can now advertise. It was written into the bill. All kinds of private entities now can buy advertising. So pretty soon, I think in June is when it's actually going to become a lawful way to raise money by buying advertising and talking about the deal on the air. Is that right? Or are there still some restrictions about that?
Right now, there's still some restrictions, but we expect the finalization of that interpretation by the SEC by June.
Okay. All right. One of the things that I think is just amazing that we can do this in the very near future is because can you see a hedge fund advertising about their private equity deal on the Super Bowl? Do you think that's going to happen, or are we 3 years out for that?
We may be a little bit far from that. I think that you're more likely to see private equity versus a hedge funds looking to raise capital from the public in lieu of raising capital from LPs or family offices. So what it does is it gives them just another avenue in which they can raise capital for their project, either through private equity or public equity.
Okay, we're going to talk about successful campaigns and all the big names that are out there in the crowdfunding sector on the next segment. But before we get into that, I wanted to get an opinion of you of how this crowdfunding process of capital formation is going to evolve in the near term. For the next 5-7 years, something like that.
Well, the evolution is already in full effect on a global basis. We know that in 2014, the crowdfunding represented $65 billion in activity, and that's pretty significant. We also know that for every dollar invested in a crowdfunding transaction, we derive about $6,000 in economic benefit. We also know that about 270,000 jobs have been created through crowdfunding. So we know it's effective. We know that it works. We know that it's something that's of the future. And what you have is you have early adaptation, you have late adaptation. So those who adopt this process early and understand it will be able to raise capital for their companies in a much more efficient manner. What
you just said, it gives me the feeling that what we're really going to be seeing is the revitalization of economies, not just in the United States, but worldwide, by using this new form of capital formation, more so than what we've seen in the private equity sector up till now.
Well, one thing that stands out there is one particular quote that I think kind of sums this entire thing up from Luke Lang, who runs a Crowdcube, which is a UK crowdfunding site. He says that he wants the crowdfunding industry to essentially be the Google of small and medium enterprise for financing. So if you can think of Google being a portal or something along the lines of Google being a portal for small and medium enterprise financing, then you have a true opportunity to present your deal to whoever feels like they are interested in it and actually has a means to invest in it.
Now, one of the other questions that came up here recently is, are these crowdfunding sites going to are they exclusive? Let's say that I was talking to one yesterday, and one of the top three yesterday. Are they exclusive to each site, or can you do multiple crowdfunding sites and give yourself a chance to spread the wealth, spread the risk on the portfolio of not being able to raise the money you need?
From what we've seen, crowdfunding essentially is a part of a campaign. We don't, to my knowledge, you don't need to have specific exclusivity on a particular transaction unless that's part of the user agreement you have with them. But typically, the crowdfunding activity is somewhat democratized, and you still have your high net worth individuals and contacts that you have that you can raise capital to, in addition to the crowdfund site itself.
Okay. All right, Ed, let's do this. Let's take a short break here. When we come back, let's talk about how to get a successful campaign going, the right partners. Before we go, please, contact information for you if somebody's interested in an authority on crowdfunding.
Anyone's interested in me as far as crowdfunding is concerned, you can reach me at info@bisoncreekcapital.com. Once again, that's info@bisoncreekcapital.com.
We'll be right back on the other side of this break with more conversations about what it really takes to raise the money through crowdfunding with Ed Baxter.